interesting bits of this report, the fact that the Vision Fund has booked its highest gain since the March quarter of 2021 in nearly 3 years. Part of that is a recovery in tech valuations. We saw what happened to the Nasdaq last year. But also, interestingly, some of those private companies are starting to see their valuations written up. ByteDance, the owner of TikTok, for example, Didi, the ride-hailing app in China as well. And there were a couple of really fascinating points just come off the earnings call now. And the CFO, Yoshimitsu Gotsu, was saying two things that are happening right now. One is that there's a shift, he called, from Alibaba to AI. This was what he said. SoftBank, as we know, was built on a very early bet from Masayoshi Son in 2000 on Alibaba. Now the company stake or how much Alibaba contributes to its overall assets held is almost at zero. And ARM, meanwhile, has gone from 9% 4 years ago to 32% now.
Can I pick up that comment you just made about the shift from Alibaba to AI? Does that mean they just bought Microsoft stock? Seriously, on the derivative gain. I mean, they could have just bought Microsoft and Meta, right?
Potentially.
We don't know what that is at this point, but they could easily have just loaded up on two stocks.
They certainly could, yeah. The amount of investment the Vision Fund made is very small, actually, in the quarter. They're still being very prudent on the way they're going forward, given some of the souring bets that have happened in 2022 and even 23.
That's a brilliant point, and actually it's exactly where I wanted to come in this one, because Karen and I had a lovely start to the show, actually. We had a really lovely chat, arguably a ding-dong, about the portfolio and what it represents as well. What does the portfolio represent now? I mean, it's about 250 companies. Obviously, it's a whole lot of bets. But are we talking everything from early stage moonshots to very sophisticated developed companies like ARM? What stage of invest? Are they targeting a different stage of early VC, stroke VC, in order to kind of propagate their portfolio?
What SoftBank seems to be doing is playing certainly at the later stages, because they have the money to do so. Obviously, as the stages go on, those valuations may grow higher, and that's where
less of a moonshot and more of a sure thing.
Absolutely, and that's what's. And I think the key, and we've spoken about it, was that whole shift we heard sort of a year or so ago from Masayoshi, a year and a half. Masayoshi saying we're going into defense mode. We've made some bad bets. We need to be a lot more prudent. And now last year the shift back to offense mode, but that offense mode isn't just throwing out money everywhere like they've been accused of doing in the earlier stages of the Vision Fund.
But
it's a lot
he
more.
Himself.
He did.
I mean, some of the copy I bit, and I really read hard into the early stages of SoftBank as well. I think it's fair to say that he admits chucking a lot of money at companies where the due diligence was sporadic and piecemeal at best.
Absolutely. He has admitted that. And so even as they're going to so-called offense mode, even as they're getting excited about the AI prospects with ARM and other companies, they're not sort of investing huge amounts as of yet. And one of the other big things as well is the shift away from China. That's the other big thing. Chinese investments now account, I think, for just 8% of the investment portfolio versus 54% years ago. Now, a large part of that, of course, was companies like Alibaba, but also they made a lot of other bets that gone south in China because of the internet crackdown there and the markets turning south.